All right. Good morning, trade pros. Welcome to our morning market update for Thursday, January the 25th. January is passing by pretty quickly here. We have Victorio visiting us again in the office today, and Victorio comes on the newswire to talk about NASDAQ occasionally. He's a good NASDAQ trader. So, welcome, Victorio. He's slumped back on the chair right now. Today, I want to talk to you guys about a few things. So, what we're going to cover is the dollar index and the reason that it's causing an upside in markets and other commodity assets, as well as the European Central Bank and the effect it's had on the euro. So just those two things. But before we start, I want to mention something to you guys. I think it's important. This happened in the trading room yesterday in real time, and it was a learning experience for me, and I want to share it with you guys in hopes that you could learn from me instead of learning from yourself. So yesterday I started trading against this bullish market, and I had the idea to be short off the open. Now, typically, I say when we start out a market session, I say, hey, look, I got a short bias, but if it proves me wrong, I have no problem with jumping on the other side of the train. Well, so here's the problem. Yesterday, I didn't jump on the other side of the train, and by the time it was about 11 a.m., I was down about $2,700. And I'm going to be real with you, because sometimes as traders, you look at it and you say, I'm going to be a trader, start rolling out the Rolls Royces, mansions, and yachts. And it ain't like that. It's no matter how long you've been trading, it's always going to be not a fight, but you're always going to have to put in conscious effort to stay on the winning side. No matter how good you get, no matter how much time you put into trading, there's always going to be an edge above which you start to perform well and below which you're a little bit you're a little bit off. Excuse me, a little bit off. You're just not yourself. Yesterday in the morning, I had a feeling to trade smaller, to maybe not trade as much. And I went against that feeling. And more importantly, I also went against the trend. So I found myself getting in trouble, down $2,700 in less than an hour and 15 minutes or so. And then in the afternoon, I said, well, I'm going to get it back. I like to fight back. I think you only become a trader. You're minted a trader when you have a really bad day and you pull it back together and you get back to break even. That's when you really get some stripes. Well, what did I do in the afternoon? I came back, I tried it, and I dropped another almost $1,000. So at this point, I was down 3,700 bucks. And I'm opening up to you about this because you need to know that this is a raw and real thing. It can happen. All right, it happens. No matter how long you've been doing it. So at that point, I gave myself one trade, and I said, erase everything else. Give myself one trade. When I got myself in trouble yesterday morning, I was trading big size in terms of lots. So to get myself out, I can't trade two lots. I had to step up to the same amount I got myself in trouble with. And I said, I'm giving myself another $400 and then I'm done. This is something you're going to need to do as well. So you need to have an honest conversation with yourself when you get in trouble and ask yourself, do I trust myself to give myself the opportunity to make it back? And here's what I'll tell you. You might look at that as a big number, but it's really not. So yesterday, I crystallized a loss of about $200. It was my first losing day of 2018. But I felt like I got away with something here. I made it back, but the way I traded really created the problem. So you might be able to make your profit back, but make sure at the same time you've eliminated the bad habit that led to that loss. Because if yesterday I walked away and I said, look, I made the money back, good job, and high five myself and gave myself a good performance grade, I'm doing myself a disservice. And why is that? Because I'm letting myself believe that doing that is going to get me out of trouble every time. Once you write that pattern in your subconscious mind, next time you're in trouble, that's the pattern that's going to come out. So you really have to be careful that when you make it back, you go back and reanalyze what you did wrong to get yourself in trouble. Don't celebrate coming back. Analyze what got you into trouble. And that's what I had to do yesterday and put some notes on it. So despite the fact that I pretty much came in from a break even from that deep hole I dug myself yesterday, I give myself a grade of a D minus at best. I did not trade well. So you guys need to know that, to grade yourself and be your own boss as well. I'm going to tell you about a quick little book that I've been reading, and then we'll go on the morning market update and talk about these things very briefly. All right, so I'm reading a book called Power versus Force. I've put the link in the description if you guys want to get your copy. It's $13 on the Kindle. I think it's $9. So it's a really good book. It's very old in terms of material, but the material is just as relevant as this today. Basically, what it says is, and I've believed in this philosophy all my life, if you're not growing, if you're not investing all your time, energy, and effort into growing, you're actually dying. Everything in your life that's not growing is dying. Just think about that concept. So as a trader, you oftentimes pin yourself as growth on your account balance. However, if your account balance is dropping on your trades, there better be something else growing. It might be your skill set, all right? It might be your strategy or gaining more information. But don't allow yourself to judge growth on an account balance. Be about personal growth. If you grow personally, there's no way nothing else won't grow with you. So you're either growing or dying. This book is really good because it sets a threshold of 200 and it gives you an accurate technique of how to measure your mindset. If you have a mindset below the 200 threshold, you're never going to achieve success because you're not in a growth mindset. Below 200, it's things like anger, pity, regret, sorrow. There's certain emotions that he outlines that keep you below that 200 level. Here's the funny part. In this world, collectively, we're 280 on that score, on that scale. 280 to about 300 as it's measured. That means that very few people in this world pull up the large amount of people who are actually not doing great. So you need to be one of those people to be successful as a trader. If you're not growing as a trader, remember this, you're ultimately dying slowly. The body, if it doesn't grow, it's dying slowly. So you need to implement that in your trading. Grow personally, learn from your mistakes, and when you're having a rough time, bounce back, but don't be happy about the recovery. Analyze what went wrong, because next time when something goes wrong, it's all about the pattern that you've written into your brain for how you recover. All right, I want to open up and be real with you guys. I had a bad day yesterday. I recovered. I gave myself a bad score for trading. Today I'm going to go out and do what? I'm going to murder it. That's just what's going to happen because that's how it is. I believe in myself, my abilities, and one day does not make a trader a good or a bad trader. Remember that. If you're planning to trade for 20, 30 years, 40 years, what's one day in the grand scheme of things? Nothing. All right, this morning's markets, I hope you enjoyed that. Japan's down 1.1%. Hong Kong's down 0.9%. China's down 0.3%. India's down 0.3%. Asian markets dropping or have dropped in the Asian session. In Europe, London's flat. Paris is up 0.5%. Frankfurt's up 0.1 of a percentage point. And the United States, pretty much 0.2% for S&P, NASDAQ, and the Dow. Crude oil is up 0.8%. And Bitcoin is down another 1.6%. We think the next support level below will be around 9 to 10,000. Check out our Instagram handle to get some more analysis. We're covering cryptos there a little bit more. Instagram.com/TradePro Academy. Or just search it on Instagram. That's how you know I'm old. Instagram.com. What? Most people just open the app. All right, so that's that. This morning, we got initial jobless claims that came out at 233K versus 235 expected. The 4-week average is 240 versus 244. So that's positive. Initial claims dropping should be a positive sentiment to the market. We got new home sales at 10 a.m. Natural gas inventories at 10:30. And boy, do we love that trade. We'll be trading that in our live room this morning. And I encourage you guys to join. This is the best time to sign up to see one of these trades in action. Any one of these trades between natural gas and oil has the ability to make your entire week's profit in one single session, 1 single hour on one single trade. It's possible and probable. So let's talk about the dollar very quickly here. And I'm going to leave the ECB. We'll talk about it in the trading room, but I'll leave it off YouTube because it's getting a little bit lengthy here. The US dollar has dropped. The index has dropped below 90 and very quickly to 88.89. And that's a 3-year low for the U.S. Here's why. Treasury Secretary Steven Mnuchin suggested yesterday that a weak greenback would be good for the U.S. A weak dollar would be good for the U.S. That's a significant shift in policy versus different administrations. Understand that. Them saying they want the U.S. dollar to be weak or a weak dollar is good for the market, they'll accomplish that. Therefore, the market's reacting to what the government or the administration wants to accomplish. So that's a good reaction. This dollar trend is going to continue lower. Well, here's the interesting thing. As the US dollar drops, it puts upside pressure on stock markets. All right. As the dollar weakens, stock markets go up, oil prices go up, gold prices go up. So it's a triple whammy on a weaker dollar. So if you're trading any one of those 3 assets, and you should be, make sure you're looking at the US dollar right now because that's what's driving sentiment. That's what's driving momentum and the trend. The US dollar has become forefront and the most important indicator to look at in this market. It's very highly and inversely correlated, and it's leading the way. So it's become a leader. In addition to the US dollar, you should be watching treasury yields. All right, Bill Gross has said that yields above 2.5% on the 10-year bond will lead to a massive stock market crash. We're trading at 2.63 at the moment. So we're there, we're above there. And he says in the medium term, that's going to be very bearish for equities. So look for those 2 things, the dollar, the 10-year treasury yield. And guys, remember this, always be growing as a trader. If you're not growing, you're effectively moving backwards. So get in a growth mindset. You have to believe in yourself. All right, you don't judge yourself by your account balance on one day. All right, and if your account balance is dropping as you're trading, you better be learning something that you could use to reverse that in the future. At the beginning when you're trading, if you're losing money, look at that as education. You're paying money to learn a lesson. This is why our course doesn't cost $30,000 like some of our competitors, because I'd rather you take that $30,000, pay the $99 a month subscription to be among a group of professional traders, and use that $29,901 to actually trade, because that's what's going to teach you, the market. All right. I guide you, but I can't teach you. The market teaches you. So if you're losing at the beginning, it's okay as long as you're losing small. You're paying tuition. If you start losing and you've been trading for a year or 2 years, now it's time to do something about it. Now you're not in a growth mindset. Therefore, something's got to change. We can help you make that change. I'll see you guys in the member area or in one of our upcoming webinars. You take care. Have a great day, YouTube. I'll see you tomorrow morning at 9 a.m. I hope you appreciated me opening up a little bit to you. I had to be honest with you. If I have a bad day and you guys could learn from it and it saves you a bad day, I'm going to talk about it. I don't really care. I believe that as traders, we got to talk about the bad as much as we talk about the good. There's learning opportunity there. See you later. I'll see you tomorrow morning at 9 a.m. for close out of the week. It's Friday tomorrow. So take care, trade well, trade careful, manage your risk, and trade like a trade pro. No patented chair spin, but I'm going to do a slow turn instead. Super creepy. That slow turn is not going to get as much traction. All right, trade pros, let's open up